Okay, so welcome to video number 3, which explains this accounting spreadsheet, which is available for download through the description below. I'm going to assume for this video that you've already seen the quick tour video number 1, and you've also gone over the accounting principles video number 2. And so I'm not going to go over the content of those again, but we'll go right ahead with this detailed overview of the accounting spreadsheet.
Okay, so here we are in the spreadsheet. We're on the Ledgers tab, which is the first of 4 tabs in the spreadsheet. You can see the second tab is called the Ledger Index tab, and that contains a listing of all of the accounts that are contained on the Ledgers tab. There's also an income statement, which lists all of the income accounts and the expense accounts, and is used to calculate the net profit. And then finally, there's the balance sheet, which lists all of the asset accounts, liability accounts, and the equity accounts, including bringing in the net profit that was calculated on the income statement. Just some warnings in terms of using the spreadsheet. The user should not edit any cells that have triple exclamation mark at the end of them. So you'll see that there's quite a few of them around here that have a triple exclamation mark at the end, including the tab names have triple exclamation mark. Those are all landmarks that are used by the macros which the spreadsheet uses, and if you change that text, the macro is going to look for particular text and it's no longer going to be there, and they're going to get confused and won't work properly. So you shouldn't modify any text that has triple exclamation mark in it. And as well, the grayed out text on the income statement tab and the balance sheet tab, you shouldn't tamper with that text. There's also some up here because those cells contain calculations and text, which again is used by the macros when they run, and if you disrupt that text, you may disrupt operation of the macros. Okay, so back on the Ledgers tab, this in fact is the tab where most of the heavy lifting takes place in terms of recording accounting entries that need to be entered in the books. Some additional warnings regarding this sheet. Columns H to O up here on row number 5 contain template formula that are copied down and pasted into all of the rows of the spreadsheet below for these columns H to O when the macros are run. So you shouldn't tamper with the formula in row number 5, columns H to O, because if you do that, you'll damage operation of the spreadsheet. And as well, there's not much point in the user modifying the data in these columns H to O, because when the macros run, they overwrite the data in those columns automatically. So whatever changes the user makes will just automatically be overwritten when the macros run. So what that really means is that the user, when entering accounting transactions, should focus on columns B through F. Those are the columns that can be modified by the user. And it's important to keep in mind that it's totally acceptable to put negative numbers in ledgers. So for example, if you've got a checking account, which I've said is RBC, which is Royal Bank of Canada, I assume that that's where the checking account is. If you say got a $100 withdrawal, it's totally acceptable to put minus 100 into column F. You'll see then this has an effect on the formulas in columns H through O. But I just want to point out that it is acceptable to put a minus figure in column F, and you don't only put in positive numbers. Indeed, putting in negative numbers is a way of communicating to the spreadsheet that it's a withdrawal from the bank account rather than a deposit. And the other thing to keep in mind is on the Ledgers tab, it's always good to have a couple of rows between the end of the entries in the first account and the heading of the next account. So this was an example entry. I'll delete it, but we've got lots of space right now between, well, this is a draft entry here, and there's lots of space between the next heading, but you always want to leave a minimum of, say, 2 lines. The reason for that is because when account data is taken to the income statement or the balance sheet, the macros run through and they pull out the final item of data out of all the transactions. But if it's an immediate run on to the next account, it might get confused between where one account ends and the next one begins. So always leave a couple of rows between the end of the data. You'll see that as we move through the spreadsheet here in the next few minutes. So the first thing to do when beginning to use the spreadsheet is to set up the accounts that your business is going to use. While most businesses will have accounts such as bank, shareholder loan, and rent, you may have some accounts that are specific to your business. For example, some businesses will have accounts like donation income, advertising expense, and things like that. So you must make sure that the accounts in each of these sections, so there's the assets section, liabilities, equity, those will be probably all the accounts most businesses need for the equity section, but then the income account section and then the expense account section, you'd have to customize those to your business depending on your particular needs. A good way to start is to maybe take the accounts that are in the template available for download and then just modify them as needed. Delete ones you don't need, add in additional ones that you think you will need, and then go from there. Important to ensure that account names are unique so that the ledger index tab macros don't get confused. So a good way to ensure that each account name is unique is to begin it with a number, a code, then you have a descriptive part, and then at the end put an exclamation mark. That way the text of the account is probably not going to be duplicated elsewhere in the descriptions contained in column E, and there'll be little chance of the navigation macros getting confused. You'll note that all account names are entered in column C, and indeed you shouldn't enter any other text in column C. It should only be account names in that column, if you do enter items in column C, you might get an error message telling you to remove it. You'll notice as well I've got some gray shaded text on some of these accounts, particularly in the assets section, because those accounts are ones that not when the business begins. Obviously, when the business begins, everything's going to be zero. But for subsequent years, the asset accounts, many of them will have an opening balance. For example, your bank account will have an opening balance at the beginning of the second year, and that should be entered on the same line as the account name or the account title. So I've got gray boxes in there for all of the assets. Same is true for the liabilities. Income accounts, typically you start those fresh at 0 every year. Same for the expense accounts. Those reset to 0 every year. So I don't have gray boxes in the amount column for those accounts because I'm assuming they're going to have a 0 balance to begin with. It's also important to understand that how you set up your accounts is quite subjective and depends on user preference. For example, I'm showing here that I've got accounts receivable in the assets section, and I've broken it down by client, so I can see the account receivable for each client. Now, if a business has got a large number of clients, that might not be practical, but if you only have a small number of clients, it can be convenient to have a separate account receivable ledger for every client so that you can very quickly tell how much each particular client still owes you. And then elsewhere there'll also be further decisions to be made. For example, if you want to break out GST and PST, so those are taxes that apply in British Columbia in Canada. So GST is general sales tax that the federal government requires that certain businesses collect on sales, and then PST is provincial sales tax. So obviously if you're not in British Columbia, or if you're not in Canada even, you're going to have different taxes that apply, but it's a matter of personal preference whether you want to break out income that you receive when a client pays you a set of money, and it includes sales taxes that are collected. It's generally, I think, a good idea to break it out, but it is somewhat a matter of personal preference. But I've got those broken up here. And then as well, things like salary. I've got two hypothetical employees, John Doe and Jane Brown. It's a matter of preference. Do you want to have a separate salary account for every employee so you can check how much you paid that particular employee, or do you want to combine the salaries into a single account? As well, when you get down into expenses, it's quite subjective as to how it's best to break it up. I've got, for example, bank fees and professional fees, corporation expenses, and then marketing. I mean, this list of accounts is really whatever the user wants to use, and then I've got a general here. So you'll have to decide what suits your business best, but certainly you have to decide at the beginning, before you start entering any data, what your accounts are going to be. Then, once you've entered all the accounts that you think you're going to want to use on the Ledgers tab, you should go to the Ledger Index tab and then you'll notice that this is broken up into different sections. There's assets, expenses, liabilities, equity, and income accounts, and each of these entries in the yellow cells is actually a reference to the relevant cell on the Ledgers tab. So for example, this is seat 35. So if I wanted to recreate that reference, I'd just do a plus, and then I'd go to the Ledgers tab, and I would select the account that I want to reference, and then I'd push enter. And then you can see here these asset accounts all are references to the Ledgers tab. Of course, that means if I modify this over here and I put in an extra word, you'll see that it will update the Ledger Index tab. It now says PayPal test account. And the reason you always want to have those accounts updated, because this button over here, the Go to Account button, provides you with a navigation tool that allows you to quickly jump to an account. So when this list of data entries gets really long in the spreadsheet, it can be quite convenient to use the navigation tool to jump to a particular account without having to scroll down through hundreds of lines. Okay, so now that we have the account set up, we've updated our Ledger Index tab, and our Go to Account macro is working to navigate around. Let's jump into the first sets of transactions.
Okay, so the first transaction that would happen when opening up a business, particularly if you're operating through a corporation, is one of the shareholders would buy some shares in the business, and that would result in cash being put into the company bank account. So the first thing I'm going to do on the assets section in the bank account, which I've again said is at Royal Bank of Canada, $100 has been put into the bank account. Now we've got to enter a double entry, because remember, every transaction has to have a corresponding double entry. And now I'm going to show you how the double enter macro works. So you select the dollar amount that you want to double enter. You click the double enter button. A window will pop up, and you now got to pick the account that the double entry belongs in. And this is where the accounting skills become important. Because we know it was a shareholder contribution of capital, it'll be the shareholder capital account. So we click that account over here. We can look at the grayed out area in the top to confirm the dollar amount of the transaction. This actually brought in the data that was originally showing over here in the asset section, and it's asking us which account do you want to do your double entry in, and what's the amount of the double entry. The reason why it asks you for the amount, even if it's a simple transaction, is because you have to confirm whether the corresponding account has an increase or a decrease. In this case, because shareholder capital is being added to, we're going to just type 100 being the same dollar amount and an increase in shareholder capital. So then click the go button. You then get a feedback form that'll pop up, and it basically just tells you what are the total of the debits, what are the total of the credits, and do the debits and the credits match. And that's a quick little yes feedback box that you can look at. As you move faster and get more proficient at doing entries, you'll probably want to just quickly glance at that box. If everything looks okay, you can push the Send All Data to Ledgers tab. But before you do that, especially if you've got more complicated transactions, you might want to look down here. So this is the origin account. It says it came out of the RBC checking account. Shareholder capital of $100 was a debit, and it's showing you that your plus 100 in the corresponding double entry account, which is the shareholder capital account, is also $100, and that looks all fine. So I will click the Send All Data to Ledgers tab over here. And now what you notice, if we look at these columns to the right of the amount column, there's the debit, which indeed was made a debit because we had a positive number in column F, and it's an asset account, and asset accounts increase with a debit. The credit is blank. The running balance is 100 because this is the first $100 in our bank account, and that's why it's showing. Then these columns over here show the number of matches and also the row containing the corresponding double entry. So we'll get into that in a bit more detail later on, but for the time being, all we're going to do is click the Go to Row button so we can go down and look at that corresponding double entry. It'll jump us down. We'll see that shareholder capital contribution is $100. In this case, it's a credit, and the running balance for this account is now also 100. It also says that there's only one match, and it indicates over here that the matching row is row number 9. So again, we can jump back to the previous row. So there you go. That's the first double entry pair entered using the spreadsheet. Okay, so our business is going to need some operating capital, or operating funds at least, and we're going to assume in this case that the business is not funded by way of selling lots of stock, but rather by way of shareholder loans. That's fairly common for a small business. The shareholders will buy shares of nominal value, and then they'll fund the business by way of shareholder loan. So let's just enter in a $10,000 amount being deposited onto the bank account on January 4th, so just the second day of the business being active, and now we want to double enter this account. If we select a column other than the double enter, the amount column, then if we push double enter, it's going to give us an error message. That means that you have to be in the column F, the amount column, when you hit the double enter button. So let's go ahead and do that now. We know that it's a shareholder loan, so that's going to be a liability of the business, and it's going to be as a debt owed to shareholder. So it's important to look at the phrasing of that account name. It's debt owed to shareholder, so the debt of the business is going to increase, so it's going to be a positive number. So we'll enter it in there. This description it brought in is actually just the default description that came out of the ledger over here, but that's not a very descriptive set of words, so let's just improve that a little bit over here. You can type whatever you want in these descriptions, and then it'll use those when it goes ahead and does the double entry transaction in the spreadsheet. So once again, here's our feedback. That looks good. It means that we were correct in entering a positive number down here on the previous form, showing that the shareholder loan was increasing, because indeed debits do match credits. We got our yes feedback. That looks fine. The descriptions are fine, and then we can push the send all data to ledgers tab. All data to ledgers button. So there we go. And if we want to go look at the double entry, we can click the go to row button up here on the top right. Indeed, there's shareholder loan account is now showing a $10,000 balance. And there's a little cheat sheet here about you type in a positive number when the shareholder incurs an expense for the benefit of the corporation. That's if the shareholder is using the company bank account as a source of funds to fund personal expenses. So let's say, for example, the shareholder went on a trip to Hawaii and got the company to buy the ticket for the shareholder, the plane ticket. So of course, that's not a legitimate business expense if it's truly for a vacation. So this would make the bank account go down. So we put minus $200 in there. Let's assume it's a one-way ticket. And we see that when you put a minus 200 in the bank account, it puts it on the credit side. You can also see the bank account balance is going down by $200. There's no double entry data yet because we haven't yet double entered it, but let's go ahead and do that. Now, we just said a moment ago it needs to be the shareholder loan account, because essentially the shareholder is pulling money out of the company, and therefore its overall shareholder loan to the company is going to be decreased. So we're going to put a minus 200. And in fact, you know what is a better description than trip? We should write maybe a plane ticket for Hawaii vacation, just to make it clear that it's not a business expense, not a business trip. If we click go, we'll see that looks good, debits match credits, and there's a yes for the feedback. If we go back to the input form, say that in that case we didn't actually have an error, but let's assume we'd put the wrong thing in here. We'd put a 200 to suggest that the shareholder loan would be increasing. If we had then pushed the go button, it would give you a warning that debits and credits do not match. It still allows you to go to the feedback form, but you get a red no here, and the problem is we've got 2 entries on the credit side, so that's not correct. If you wanted, you could cancel all entries if you just want to ditch the whole thing, but more likely what you want to do is just go back to the input form, click shareholder loan, do minus 200, click the go button, then you're getting everything balancing. Alright, so now I'll send all data to ledgers, we now see that we do have double entry information. We can click go to row, and there it is. We have the matching data now shown correctly in the oh, you know what, that's the shareholder capital account. That is not the correct account, so I need to correct that. So this is a good example of actually how the flexibility of Excel can help you fix things. So I will just delete that data because I don't need it. It was entered in the shareholder capital account when it should have been the shareholder loan account. When I was distracted by the screencasting software and things like that here, I did it incorrectly. So what I'm actually going to do is I'm going to correct my description here just to show you that you can also edit these descriptions without concern for damaging the spreadsheet. Columns A through F you can edit. So plane ticket for Hawaii vacation. So because I just deleted the double entry that had been inserted, we now are back to a situation of having no double entry data. So what I should have done after clicking the double entry button is I should have said debt owed to shareholder minus 200, and then I should have hit the go button, and it balances. Note before it did balance because you can obviously still make mistakes. If you choose a corresponding double entry account, there I chose equity, an equity account instead of a liability account, but both liability and equity accounts have a debit causing a decrease and a credit causing an increase. So if you pick the wrong account on this side of the form, it will give you feedback saying that it looks okay, but in fact there's an error, and that's what we just saw. So this spreadsheet and any accounting system is not going to be foolproof. If the user types in data that's incorrect, it may lead to an apparent balance or perhaps balancing on the incorrect balance when in fact there is an error. But anyway, now we've fixed it, so I'll click the go button. I'll send all the data to the ledgers, and now it should, when we go to row, it takes us to the shareholder loan. And we see now that the total amount owed by the corporation to the shareholder has actually gone down to $9,800, and we can jump back to the bank account section. All right. So now that we've entered a couple of entries, 3 in fact, let's just look at some of the checks that the spreadsheet does. First of all, one of the most important checks to keep an eye on is the debit and credit balance. So this cell over here calculates the total of all debit entries in the spreadsheet, and this cell over here calculates the total of all credit entries. So if these numbers are the same, then this green box is going to be showing a yes, and if the numbers are different, for example, if we made this one minus 201, then well, you've got to make sure the date here is correct. So I'll explain that in a second, but let's just put this date to January 10th, 2017, because these tallies, you can see there's a sum if formula. Well, the if part of it basically says that only tally up entries that are on or before the date in this cell. So if we go back to the correct number in the cell, you'll see that it's January 10th, so it's going to add up all of these entries to $10,300, and it's saying yes, it's balancing. If your date here is earlier than the latest date out of all of your ledgers, so for example, if we made it January 4th, it'll still check the balance. It's only now counting up entries to January 4th. It's going to ignore everything after the date in this cell over here. So that's why it's only going to be $10,100. It's just adding these two, and then there's the $100 and the $10,000 amounts below. It's not going to include the $200, and that's why this cell over here is shown shaded red. It's telling you it's balancing a subset, and so if you want to ensure that if say you've just entered this one and you want to check whether it balances, you can just click the date button in this cell, so this little box over here, and it'll take the January 5th date, it'll pop it into that cell, and then you'll be able to quickly check whether you've got things balancing here. As I mentioned, if there was an error and you don't have a balance condition, then when you click the date button, it'll bring the January 5th back up again. It'll say no, it's not balancing, and you can see there's a difference here. When that happens and you think, oh, geez, I've got problems now because there's something not balancing in the spreadsheet, that's when it's time to look down this column over here and look for a 0. So let me explain in more detail now how these two columns over here work. This column, number of matches, tells you the number of matches in the spreadsheet, and it's a match if it's got the same dollar amount on the other side of the accounting equation. So with this row, when it calculates this cell over here, it's looking for a matching amount, but in the credit column. And it's got to have the same date. So this one is finding a match, and it's on row 132, and we can jump down to row 132 using the Go to Row button, and we can see, well, not surprising it matches because indeed there is a matching entry. Same is true for this one. This one doesn't have a match right now. So if you want to know which is the entry that's causing an error, you can just run your eye down the column N, the number of matches, and you can look, where do I not have a 1? Because if you don't have a 1, and in particular if you've got a 0, then that could be a row that is not properly double entered and balanced. But what you can do is scroll down and look for, there it is, there's a 0. So that I know is incorrect, so then I examine the data over here, I go, oh, there's a minus 200, and I remember the one up top was a minus 201, so I know that that's my problem row. Once I fix it, it's now balancing over here. I do have a corresponding double entry row, and then the debit credit balance has also come correct. So this set of cells up here does a check for where the debits balance credits, and these figures here between the orange columns, they basically are just feedback and are a guide when you're troubleshooting as to where a problem occurred. So that's pretty much an overview of these calculations over here, although I will come back to it later on, because sometimes you can have two entries which are actually just by coincidence you've got multiple matches. So perhaps let me go ahead and explain that now. So consider, for example, if I go to the store and I buy some coffee, and it shows up obviously as a negative in the bank account, so it's a credit, and I double enter this one, and let's assume I'm taking a client out for coffee, so it is actually a deductible expense. So I'm going to put it in the expense section, and I'm going to maybe call it marketing. Do I have a marketing section? Yes, I do. So I'll put marketing. The expenses are going up. So I'll make it 3.46, expenses going up. I'll click go. Then I'll see that yes, my debits and credits match. Coffee. I might want to maybe just be a little bit more descriptive. Sorry. Sorry. Good example. You cannot edit on this form in these grayed out boxes. It says this form displays output only. Do not enter data on this form. And one of the reasons for that is because I don't want to have to type or edit the descriptions twice. So if I go back to the input form and I'm going to say coffee with Jim, just perhaps I want to have a note of exactly who I had coffee with in case the tax authority wants to know that I was actually with a client. So then I click the go button. Yes, everything's balancing. Coffee with Jim is now showing up in 2 locations, and I'm going to click the send data to Ledgers button. But then what happens if I bought another coffee, because the meeting was going well and it went longer than expected? So I now have to double enter this one. So I'll go ahead and do that. I'm not going to worry about the description this time. Expenses going up again, 3.46. I'm going to... Oh, see the error message there? I failed to enter that it was the marketing account, which should have the double entry. So luckily the spreadsheet warned me that there was an error there. Click go, and there's my double entries. Yes, it balances. So I will send the data to Ledgers. So now we see that there's a 2 in this column over here, and that is telling us that there are 2 matches. In other words, there are 2 corresponding debit entries with the same date. And in fact there should be, because I did buy 2 cups of coffee on the same day. So in that situation, if I jump down to the other account, I can see it over here. The entries are entered down below, and there's nothing wrong with that. This spreadsheet is balancing fine right now. I should maybe click this date button to make sure that the date cell over here has the correct date in, and then everything's balancing. So there's no problem right now, but there is a 2. So there are some situations that you can have a 2 in this column over here. And so maybe I'll also just briefly show you these buttons up here. If you have a 1 and you don't want to jump down to the row using the go to row button, and by that I mean you don't want to jump down to the row containing the double entry, but you want to see both transactions side by side, then you can click the message box button, and then it'll show you the debit and the credit, assets, liabilities. It'll tell you the row that the other transaction is on, but you can see them both side by side. So if you push the hide button here, it won't work. It'll tell you that you must select a row with a 2 in the number of matches column before running the hide button. So the hide button is will work here if you want to see the corresponding double entries. In other words, you want to check that your 2s are an acceptable coincidence rather than an error. So you click the hide button, it'll hide all rows except the ones with the same date and the same amount in the amount column. But it'll leave all the ledger headings so you can see which ledgers you're dealing with. So the thing to look at when you hit the hide button is to come back to the orange columns and look between them and see your 2 double entries, and then check that everything looks like it's matching. When you're done, you just click unhide and you're back to where you started. So that's basically what those buttons up there do. Alright, so now our business has only been around for about 3 days and we've only got 5 transactions. But because accounting can be overwhelming for people who aren't trained accountants, it may be that at this early stage you want to check, okay, I've only got a couple of transactions, but what would my income statement and what would my balance sheet look like? So you do not have to wait until the end of the year to do your income statement and your balance sheet, but you can do a snapshot at any time. And indeed, it's a sort of fundamental premise of this spreadsheet, and it's designed in a way to allow this, that you will check that your balance sheet balances and your income statement is correct every once in a while. So you can even do it at the end of every day. So the first thing you're going to want to do is just double check that you've got debit and credit balance before you even go to look at the income statement. You can then go to the income statement tab. You can see there's no data in here right now, but if you click the update references to ledgers button, it'll pull in all of the account balances from the ledger index. Sorry, from the ledgers tab, it'll pull in the account balances, but only for the accounts which belong on the income statement tab. So the income accounts and the expense accounts belong on the income statement tab, and they are brought in using references. So let's do the marketing one, because we know that we just bought those 2 cups of coffee. So here is the reference. So that if you needed to recreate the reference, this is what you would do. It's actually working right now, but if you did want to do it, you'd click on the cell over here, you type plus, you go to the ledgers tab, and then you scroll down to marketing, and you just click in column C, you push enter, and now it's brought in the marketing description and the amount. So you click update ledger references, it's bringing them all in. Right now it's only a single account, so we've got a net loss of $6.92. If we go to the balance sheet, again it's a whole bunch of zeros, and it's not balancing right now because we haven't brought in the data. But if we click the update references to ledgers tab, it'll go and collect the information. So it's bringing in the bank account balance, it's bringing in the shareholder liability balance, which is that big number. It's also bringing in the shareholder capital, which is $100, which was the purchase price for the shares, and it's also bringing in the net profit. This is referenced back to the income statement, and our balance sheet balances. Assets minus liabilities is $93, and the total equity is also $93. So I'm not going to get into the accounting principles. The second video covered that, but the point for present purposes is that you can check that your balance sheet balances after every account entry that you add. And again, I'll say it repeatedly throughout this video, but it's encouraged that you do that because that's the way you find errors early on. If you leave it for the end of the year when you've got hundreds of entries and now you've got to go and try and figure out where the mistakes were made, yeah, sure, you can use these calculations over here between the orange columns to help troubleshoot entries, but it's going to be way more of a can of worms. You want to, I say, do it early on. Every few days you should, or every few days worth of entries, you should run the balance sheet and the income statement calculations and check if it balances. And in fact, an easy way to do it, you don't even have to navigate to the income statement and the balance sheet tabs, but rather you can do it right here from the ledgers tab, and you can click the update ledger refs button, and it's just run those same macros and it's brought them in. And then what you have over here is balance sheet balances. There's a check, it says yes, and it's basically just got a calculation that looks at the data on the balance sheet. It's the same data that is basically looks at that cell, and yes, it balances. So this has got a green light over here, and an equivalent green light shows up over here. Okay, so now let me explain this check in the cell over here. This one says balance sheet date matches ledgers, question mark. So the balance sheet date is in this cell over here. In other words, the grayed out text over here looks at the particular entry and it pulls in the date of the balance from the ledgers tab. Now, in this case, the $9,893.08 was the item brought in for the RBC checking account, and that was a January 6th, 2017 date. So that's why we've got January 6th, 2017 over here, and as well this calculation over here takes the oldest date out of this whole column. And these ones were January 5th and January 3rd, so right now it's taking the January 6th date and it's putting it in here. The reason why this check is necessary is because when the macro runs to take account end balances to the balance sheet and the income statement, so by account end balance I mean the final balance for the checking account was the $9,893, the final balance for the shareholder loan account was $9,800, and that's why we see $9,800 over here for January 5th. So it's always taking the account end balance. So when you push the blue button, what the macro does is it comes to each of these accounts, it runs down the account from the beginning to the end, and it picks up the final number and takes it to the income statement or the balance sheet as appropriate. But if you've got an item in here, which let's say was January 7th, 2017, and it's not balanced, let's just say it was another cup of coffee, hypothetically. Let's say it was an expensive cup for $5. Then when we update the ledger refs, first of all, the balance sheet doesn't balance, and that's not surprising because remember we didn't double enter this one. This one is an account which hasn't been double entered. So the balance up here is showing it does balance, but remember that's because we've got January 6th in here. If we put January 7th, 2017, it's going to say no, it's not balancing. But let's come back to January 6th, 2017. So yes, this is balancing because it's only doing a subset. This is not double entered, and that's why the balance sheet is not balancing. And the reason the balance sheet is not balancing is because the balance sheet is not looking at this date over here and only selecting entries up to that date, but instead it's bringing in the final date. So it's going to be bringing in the 9,888.08. So let's go and have a look. Yes, exactly, that's what it's done. So the balance sheet and the income statement calculations always pull the last entry in the account. But if you've not balanced or you've not double entered all of the transactions in the checking account, then things aren't going to balance. So the balance sheet and income statement macro should only be run when you've actually double entered everything in the checking account. And then when you click the update references, it's now going to balance, so that because now the balance sheet date does match the ledger's date. The ledger's date is January 6th. The balance sheet date is January 6th because what it's pulling in now is this entry, which is January 6th. So that's an overview of this check over here and an explanation as to why you should only run the balance sheet and the income statement check once you've double entered all of the transactions that are currently in the checking account, or in fact in any other account. Even if you had a January 7th entry in this account down here, or one of these down here, it's going to cause the balance sheet to not balance. So definitely only click the balance sheet, the blue button to update the income statement of the balance sheet once your balance here is showing correctly and you do not have a red shaded box over here. And well, actually perhaps I overstated it a bit when I said never push the blue button until you've double entered all the transactions. You can push it. It won't damage the spreadsheet. It'll just give you unhelpful feedback in terms of red cells over here. Alright, so you may remember one of the things that was said earlier on was that you should always leave at least 2 rows between the final transactions in a particular account and the beginning of the next account. It'll now perhaps be more clear as to why that's necessary. Remember, the blue button macro runs down this account and pulls the last figure, but it's looking for empty rows, and then it actually steps back a row to pull the last figure. So if there's no empty rows here, it might get confused as to which is the end of one account and the beginning of the next one. So what you can do here, you can use the insert row button to insert a couple more rows. Or if you want, you can just use the regular Excel insert rows feature. But you'll notice that when you do that, it doesn't put in the A over here. In other words, it's entering a truly blank row, as opposed to when you use the insert row macro, then the insert row macro not only puts an A in the cell over here, but it actually also copies in the formula in columns H through O. If you did use the regular insert function of Excel, that's no problem. You can just click the formula fix button over here, the pink one. It says the formulas have been fixed. We now have A's over here for the asset section, and also these columns over here have the formulas that they need. And in fact, the formula fix button is one that can be clicked at any time if you have any concern that maybe the formula has been tampered with. All the formula fix button does is it takes this set of data over here, which is the sample formula, and just copies them down through all columns and all rows below. You might notice the word Nilo is sometimes showing here. That's a bit of a strange thing. It's actually a word I made up to indicate nil, because the array function, which is in this cell over here, you'll notice there's curly brackets on the beginning and the end of it. When you look at what the array function does, and you also look at what the gray cells here do in terms of looking up values, they got confused by zeros, and in some cases got confused by the typical nil value, which in Excel is used by inserting double exclamation marks when you're running macros. So both setting it to 0 or setting it to nothing, double exclamation mark, sorry, double quotation mark, not double exclamation mark. The double quotes basically was causing trouble with the array formula and the import formula. So I just made up the word Nilo for nil, and that works fine. So it's just a bit of a strange thing, but you can ignore it. There's also conditional formatting in these cells over here. So if they're showing either 0 or Nilo, it basically shows it as blank, or it makes the text white, which is why you can see it when you highlight it like this. But the reason why we want that text white is so it doesn't, you don't get a whole bunch of zeros in here which mean nothing and just make the spreadsheet more difficult to read. Alright, so let's insert quite a few more rows over here. Push the F4 button just to get us quite a bit of space, because what I'm going to do is show you now how you can import data from your bank account statement. So as mentioned in video number 1, the spreadsheet is not designed for large organizations that have full-time bookkeepers that enter transactions in real time as they occur, but rather it's for the small business owner who has maybe just 50 or 60 transactions a month, and at the end of the month that business owner comes along and wants to do the accounting and get everything up to date. Well, that person is probably going to go to the bank account and say, well, here's the entries in my bank account, so let me copy and paste them into the spreadsheet, then I'll double enter them, and then I'll check if everything balances. So depending on your bank, what it looks like when it exports the account data to Excel will vary. but I've got an example here that I've just typed up a bunch of account entries. We've already seen some of them. There's the share purchase amount, the $10,000 shareholder loan, then we've got the coffees and the plane ticket and things like that. So we're going to bring in, let me bring in a couple of days. Let me just bring in 2 days worth. Although, in fact, you know what, before I even do that, I want to just check, is everything balancing? Yes, all balancing. If I'm nervous, I can double check by hitting the blue button. Yes, everything's balancing. Alright, so let me then bring in 2 more days of data. It's good to bring in data just a couple of transactions at a time, so that you can, when you've brought it in, you can click the blue button and check that the balance sheet is balancing. If you're bringing in a whole month, then remember you're going to have to wait until you've double entered all of those entries before you can check that the balance sheet balances, but then you'll have a much larger volume of data where errors could have crept in. So it's good practice to have the spreadsheet off to the side, which I'll do as well on my other screen here. I'll just copy and I'll paste to bring it in. This is some stationery, which was bought from Staples. So I'll double enter that. I'm going to put it into, well, that's an interesting question. We don't have a stationery account. So here's an opportunity for me to show you how you do that. So let me hit cancel. So let's assume that we wanted a stationery account as a type of account that we want to have in our ledgers. So it's basically an oversight. When we designed our ledgers, we didn't have an expense account for stationery. So let's go down to the red at the bottom. Let's insert some rows, but let me first just put the stationery in there. It's going to be 5021. Remember, we want to have unique account names, so that's why we're putting them in column C. We put an exclamation mark at the end and a code at the beginning, so that we ensure that it's unique, unlikely to have that wording just in a description in the description column. Now we have to go to the ledger index tab, because if we use the go to account macro, now we'd see that stationery is not on the bottom there. So if you want your go to account macro to be up to date, you have to make sure you go to the ledger index tab and update it. And even if you don't use the go to account macro, we'll see in a moment you also want to update your expenses on your income statement. So that's the second reason why you want to update your ledger index. So let's go over here. Let's go to a reference to the stationery. There it is. Okay. And now the go to account, we could click that and it'll jump us not very far, but at least we know it's working. Then we've got a new expense. We've got to go to the income statement. If we don't, then the blue button is not going to import any data for an account unless that account is listed in expenses. So that's important. You have to know whether it goes on the income statement or the balance sheet, but once again, that's the accounting principles aspect of things, which we're not covering in this video. That was video number 2. So now we're just going to know that it goes in the expenses section of the income statement. That's done. So now everything's looking good. We can go back to this account, the checking account. Let's double enter it. We now see that it's in the double enter form. So again, even if you don't use the go to account button, you must enter stationery on the ledger index tab, so that stationery shows up over here when you want to double enter. You can see the amount is 112, so we're going to go expenses are increasing, so that's a plus number. Click the go button. Yep, debits credits are matching. Staple stationery, that description is fine, so I'm going to send all data. Then I can click I must click the date button to update now to January 7th, because this is balancing, but it's warning me it's a subset. So if I want to check if it balances as of today, that's right, still a subset because we've got this January 8th date in there. But let's go and enter this one. Okay, so payment re-invoice 1234. So what that is a payment that a client made on an invoice. The problem is we haven't got the invoice recorded yet. So let's maybe that'll happen when you're going through your bank statement. You're going to realize that you failed to enter the invoices and other things that maybe weren't showing up in the bank statement. So before we double enter this one, let's go and get the invoice transaction, which I've actually got in my other spreadsheet over here on the side, just as an example. Let's go to the income account over here, client income. Let's assume that this particular invoice is for client 1. So let's go to account, and I'm going to type it in over here, and that is a cash transaction. And in fact, in this case, when I enter that in invoice 1234, it has now recognized it as being double entered with that entry I just put in the bank statement. So I could have just clicked the double enter button and then said, oh well, that's a amount coming to the bank account from a client invoice. But it is good practice as well to maybe also at month end you go through all your invoices. You could even enter them all in if they are cash transactions. I've got cash written in here indicating the client paid for it cash immediately. And then that's a way of checking that all your invoices are correct and you're not missing any. And then they should match with the cash receipts you got in your bank statement. But there might have been a different situation. There might have been another invoice that I issued which was on a credit basis. In other words, the client didn't actually pay. So here's an example where we're going to double enter a transaction which is not showing in the bank statement because it hasn't actually been received yet. Remember, the bank statement's only going to show cash that's actually come in the door. But if it's client 2 was the person I did the work for, sorry, this is actually meant to be client 2, so let me just move it down to where it belongs. And I'm going to delete this one here. This was client 2, and I said credit. So that client did not pay cash. Maybe they're going to pay next month or something. So now when I double enter, I'm going to have to double enter out of this account because it's month end. I'm typing in all my invoices, and now I need to double enter this transaction. So what we're noticing here is you don't only double enter out of the bank account, but you might also have to double enter out of other accounts. For example, type in all your invoices at month end. The people that haven't paid, that's going to be double entered into accounts payable. Sorry, accounts receivable. So that would be an income account as well. Sorry, an asset. It's an asset, I believe, and it should be accounts receivable client 2. So I've got a separate accounts receivable account in assets for every client, as explained in the accounting spreadsheet. That's a matter of personal preference, how you want to do that. But accounts receivable is going to be increasing by $336. So type in 336, and I click go. Yep, debits and credits are matching, that's fine. I'm happy with that description. If I wanted to edit it, remember I've got to go back to the input form and edit this one over here. Maybe I don't need to say client 2 since the account name is going to be client 2. You can see here it says client 2 there and client 2 there. But things are matching fine. Click send all data ledgers, and now it has a double entry. So here's an example of a double entry. An income account is balancing with a accounts receivable account in the asset section, and we're not involving the bank statement at all, which is just an example of how the bank statement is not involved in every transaction. Okay, so now if we want to check that all the data balances, we've got the subset warning here indicating that things are not correct at present, in the sense that we're not looking at all of the data, and that's because January 7th is in cell D3 over here, and we can see that we've got a January 8th. So we'll click the green button. It takes January 8th into here, but it's still only looking at a subset, and remember that's because you can't look only at the bank account, but you've also got to go down to this AR account which has the January 9th date. So then we click the green button. That looks better. Now it's balancing and it's not doing a subset. So now it looks like everything is balancing. All our rows here are matching. We do have our coincidence coffee entries, which are fine, but now we can click the blue button to see if we can get the green positive feedback to come in over here, and indeed it does. So that's a further demonstration of how I say you should, every couple of days or every couple of transactions, you should check that your balance sheet balances, and don't leave it for the end of the month when it'll be more of a can of worms to try and find any errors that are crept in. Alright, so let's come back for a moment to this January 8th amount that we received from the client for services provided. It is actually not $224 on account of services provided. It was $200 for services provided, and then it was sales taxes. Now, even if you're in a different jurisdiction, you might have similar natured sales taxes that apply, and it's good practice to break those out in your books and not show them as a composite amount. In other words, you don't want to be showing the $224 that we had down in the income account. That's actually an overstatement of the income. The income was only $200. So this spreadsheet does have a tool that allows you to explode composite amounts down into their component parts, and it's actually built into the double enter macro. So on tab number 1, you enter the income of $200. On tab number 2, you enter the GST collected of $10, and on tab number 3, you enter the PST collected and ultimately to be remitted to the government of $14. You then hit the go button and you see that it has broken it down into the 3 component parts, both in the bank account and down below the corresponding double entry accounts. There's now 3 of them. There's the income account, the GST account, and the PST account. But what happens if I want to indicate that this is actually a component part? Well, luckily, when it built this description here by the automated process, it did put in part 1 of 224, which is useful. If I don't like that, I can click clear totally, and I can always put customized descriptions in. Indeed, when you click these buttons over here, it applies those changes to all of the tabs at once. So if you want to show the source description, being the description that came from the Ledgers tab, you click the orange button. You want to clear totally, you can click the clear totally button, or you can add parts, which is basically showing that you've got part 1, part 2, and then part 3. And it's quite useful to have that so that when you see an amount in the bank statement, once it's exploded, you have your attention drawn to the fact that actually it's one component of a more complex transaction. So debits and credits are balancing, that's fine. Let me click green, go to ledgers. We see now that it's broken it up, and indeed each of the components has its own double entry. So for example, this would be the GST. Down in the GST collected account, it's got the $10, and I can jump back up to the top, or of course I can click the message box if I want to see more quickly what the double entry is. So that basically is a demonstration of how, if you have an amount in the bank statement that you rather want to break into component parts because you don't want to misrepresent actual income, for example, in this case, then you can use the double enter button. You just use as many of these tabs as you need, up to a total of 10. You click off the applicable accounts and then proceed by clicking the go button. So hopefully that's clear, and I'll now go on to explain how it's not only amounts that you receive that may need to be broken down into component parts, but also amounts that you pay. So let's come back to this account entry over here. So this is stationery, and it's indicated to be $112, but in fact it was only $100 on stationery and $12 in tax. So I'm going to go back down to the stationery column. I'm going to delete this one because it's actually an overstatement of the amount paid for stationery. And then I'm going to show you how we can use the double enter button to explode a payment amount into its component parts. So the stationery itself was only $100. So we click the stationery item, go to tab number 2. The GST paid was $5. And then it was $7 in PST, but this is maybe an anomaly in British Columbia tax law. I think it doesn't apply in jurisdictions where there's HST, but in fact in British Columbia the PST that you pay is simply added to the cost of the item, and even though when you were standing at the shelf and you picked off your $100 worth of stationery, it only showed $100. So far as the government's concerned, you paid $107 for that, and that's the amount that gets treated as an expense. And the GST is something that you should record separately because you can claim it as an input tax credit. So in other words, when you collect GST from your clients, at the end of the year you've got to remit a certain amount to the government, but you don't have to remit everything you collected. You remit everything you collected minus what you paid at the store. So that's why you want to separately track the GST. The same is not true for PST. You've got to remit everything you collect, but you cannot claim an input tax credit. Some people say that's very unfair, but that's just the tax system, and we're going to live with it for now. So I think I've now finished all of my double entries. Let me check if I didn't make any mistakes. Yes, debits and credits, both $112. They match, that's fine. 107, which as I've explained for tax reasons is the true cost of the stationery, and everything looks good, so I will send the data to the ledgers, and we can now see that this red text is actually just an anomaly from my spreadsheet that I made. My sample spreadsheet had, oh, it's not working. Why is that not working? It should be, let's try the paintbrush. Ah, there we go. So, as I mentioned, there was minus $112 for the stationery over here. But that's because the formatting is different in this other spreadsheet. So I've just made it the same now. Alright, so that explained the double enter button, both for income and for expenses. Okay, so I'd like to show one more example of using the double enter button to explode an expense amount, and I'd like to do it for when an employer has to pay a check to the taxation authority on account of income tax and other statutory deductions kept back from employees. So I've actually just gone ahead and double entered some wage transactions. Over here is a wage transaction for John Doe. Here's one for Jane Brown. You can see I've already double entered those into the applicable ledgers. It is showing as a duplicate. There's a 2 in this column over here, and that's because they got paid exactly the same amount. But it's actually this line over here that I'd like to focus on. So this is the $1,556 that was held back from amounts otherwise paid to John Doe and Jane Brown, and here are the component parts of that $1,556 amount. There's $500 in income tax withheld to be remitted direct to the taxation authority on behalf of John Doe, similar for Jane Brown, and then there's a Canada pension plan, statutory deduction, which in British Columbia it's mandatory to take. It's a percentage of payments made to employees. So I've just said it's $210 for John Doe and $200 for Jane Brown. And then there's also a employer portion which has to be remitted to the government. So at least in respect to the first 4 items, these are actually amounts that I'm technically paying to the employee, although instead of handing them physically over to the employee, I'm going to remit them direct to the taxation authority as the legislation requires. But when this $1,556 amount goes out of the bank, it's a single check that I write to the taxation authority. So it's going to show up in the bank account as a single item. So it's that single item which needs to be broken down. And when I copy and paste out of my bank account, it's going to be showing as a single item. So I'm going to use the double enter button to explode it. So here we go. I'll hit double enter. Then I'll keep in mind the double entry transactions that I want to enter. So let me see if I can show them both on the screen at the same time. So I want to do $500 is income tax withheld for John Doe. Tab 2, it's going to be Jane Brown, 500. Then it was CPP for John Doe. Oh, sorry. That's got to stay there. I've got to go to tab 3 to do CPP for John Doe, which was 210. So I'm actually going to push this off to the side here. 210. Tab number 4 is Jane Brown, CPP. And then tab number 5 is the employer contribution of CPP. And that's 146. So I can click go. And those all balance in terms of debits and credits. Again, if I want to go back to the input form and put my part numbers in, just so I can show that there were 5 parts, Go back to the feedback form and everything there looks okay. So I can click send all data to double enter to the ledgers, sorry. So that's a demonstration of how you can use the double enter button to explode statutory deductions into component parts. And as mentioned before, you can do up to 10 component parts. If you need to do more than that, then this spreadsheet is going to get a bit longer, and then you cannot use the double enter button, but you have to manually double enter the transactions. So let me show an example of a manual double entry transaction, because to this point I've been using the double enter button, but I just want to demonstrate that this is ultimately a regular spreadsheet and you can do double entries manually. So let's make this double entry entirely manual, so we won't even copy and paste from the bank account. We'll imagine that it's a cell phone bill, and we'll imagine that it's a $50 cell phone bill. So you can basically just type the data directly into columns D through F. You can see that there's no matches right now because there's no other $50 transaction on the debit side on January 16th. I can then go down to the cell phone ledger, because I've decided to have a standalone ledger for cell phone expenses, so I can monitor that over time. I then got to say January 17th, 2017. I think that was the right date. I can make customized description. It doesn't have to be the same description as contained above in the bank account, and then I can that's an expense going up and it was $50. So for some reason this is not balancing, so I've made a mistake, but that's okay. This is why we have the feedback there. So it's meant to be the 16th. So let's go back to the expenses, save the scrolling, we'll use the navigate button, and it's meant to be January 16th. So that's a demonstration of how you can enter the data manually. We now see that it is balancing, and of course it's easier to copy and paste from the Excel spreadsheet that you might have downloaded from your bank statement, to copy and paste that data into the checking account section at the top of the assets section, but that was just an example of how you can enter it manually if that's what you want to do. So it's been a while now and we haven't checked whether the debits and credits balance, and we haven't checked the balance sheet, so let's do that now. We can see that right now January 9th is showing, but we want to do the 16th. So we can also just type directly into the cell if we wanted to. We don't have to use the date button. We can see yes, debits and credits are balancing, and we got positive feedback here. The balance sheet is not balancing, but that's not surprising because we know we've entered some more recent data, and in fact the balance sheet date is still on January 9th, so that's fine. Let's go to the blue button over here, and yes, everything's balancing. So next, let's bring in a bit more data from the bank account, and I'll show you one or two more things. So let's bring in 4 transactions spanning a couple of days. So I'm going to copy and paste that into here. I'm going to paintbrush again to make the formatting consistent. We don't want the red text in this spreadsheet. So these are the ones we haven't double entered, as indicated by the zeros over here. So let's go ahead and have a look. We've got a payment of invoice 5678, and that is actually, if you remember, the amount that we previously recorded as due from the client and recorded in the accounts receivable ledger. So now the money's finally come in. Now we need a double entry to basically bring the account receivable amount back to 0. And we're not going to affect the income account because the income account already has client to income $336. It's already been recorded in the income account, but we simply want to note that accounts receivable should now be reduced. So that's okay. We can double enter this, and we go to assets, accounts receivable, client 2. I believe that's correct. It's going to be the $336 amount that we see up over here. And accounts receivable is going to go down, so we put in a negative. There's going to be less due to us from others as of the completion of this double entry. So let's try that. Yes, I made it negative, so it pushed down accounts receivable, and that's why debits and credits are balancing. So I'll go ahead and send the data to ledgers. There's now one entry, and it's on line 102. And if we go there, we can see that the account receivable for this client has now gone to 0. So we go back to the top. Okay, so now I'd like to show you a example of how you can move a amount of money from one asset account to the other. Again, this is maybe somewhat more of an accounting lesson than an operation of the spreadsheet lesson, but it is valuable nevertheless to see how the spreadsheet does this. So actually, I do want to delete this row. I was going to discuss this example, but I've changed my mind. So if I use the regular Excel delete function and I delete rows, you'll see it puts some errors into the running balance column, and that's because the running balance calculation normally looks at the row above. So I've just deleted that row, and now it's lost its reference, and that's why we see a bunch of errors up here along the top. But that's okay. I just click the formula fix button, and all the formulas have been fixed again. So here is the amount that my bank account is showing as a transfer of $1,000 to an iTrade account. Perhaps I've got some spare cash in my business and I want to put it in some bonds, so at least I earn some income on that cash while it sits around. So this is basically just some data that's come in from the bank account. It's not yet double entered. So let me go ahead and double enter it. Basically, I just say iTrade cash is going to go up by $1,000, and it's as simple as that. Debits match credits, transfer to iTrade. That makes sense. So I click the go button, and we see that we now have the cash down in iTrade. Then it's sitting in cash right now, but I still got to buy my bonds. So if I do that, it may be on a subsequent day, maybe January 26th. I come along and I take $900 out. Now this data I would actually do by looking at my iTrade account statements at the end of the month. It would be minus $900 in cash, and then if I want to double enter it, it's not too far down there to just type it in manually. But if I want to double enter it as iTrade Holdings, and I go 900, there was no description in there, which is why this is blank. But I can say buy bonds and click go. That looks okay. So I'll say send data. So there it is, buy bonds, take 900 out of iTrade cash, and now it's in iTrade Holdings. The reason why this is important is because you might have a number of transactions throughout the year where you buy a number of holdings. At the end of the year, you want to bring the cash balance into your balance sheet, which might only be $100. In fact, if we quickly run the balances, the balance sheet is not balancing. Let's see why. Do you remember why? It's because we've still got a 0 in this cell over here because we've not double entered that transaction. So let's just delete this one, then balance the balance sheet. Yes, everything balances. So coming back to this, it's brought in the $100 into the balance sheet. There it is, iTrade cash. But at the end of the year, you are going to want to check that your cash account in your ledgers matches what your iTrade statements are telling you. When it comes to holdings, that's a bit more difficult because your holdings might have fluctuated in values, especially if some of them were equities. But what I do is just keep the holdings at their original purchase price until eventually if you sell them, and if there's a capital gain or capital loss, then that needs to be accounted for at the time of selling. But for the present discussion, I just wanted to show you how you can take cash out of your bank account, put it into your investment account in the form of cash, and then you can put it into a holding. All right, so I think that's pretty much the end of the description of how the double enter button works. A couple of items which I don't think I've mentioned. If you want, you click the sort by date button. It gives you a warning that if there's any lines without dates partway through an account, this macro will not sort that account properly. Because what it does, it goes to every account in the spreadsheet, it selects the data from the top left to what it thinks is the bottom right, and then just sorts by date. If there's a blank line halfway through the data, it's going to think it's got to the bottom when in fact it's halfway through. typically, if you enter your transaction information in date order, you would never have to use the sort by date button, but it's just there in case you want to sort by date. I'm going to say yes. In that case, it was pretty quick for the macro to run because there's not a lot of data in the spreadsheet. But that's basically how the sort by date button works, and it finishes off by fixing the formulas. Because if it's sorted and maybe some of the running balance formulas got disrupted, it quickly runs the formulas, the formula fix button. Okay, so let me explain this check over on the right hand side over here. This check is totally optional. You may want to just ignore it or even delete it just by deleting these columns. But let me explain it briefly. What you type into this cell is the actual year-end balance of your bank statement. So let's say it's 5785.08. Let's just say I read that number off the bank statement. Just typed it in wrong. Then in this cell over here, you put in a reference to the final figure in your bank account ledger. And you'll see that that sets the cell over here to green, indicating that it's correct. So this is the actual balance that your ledgers are telling you, and that's the target balance, and it's the statement from your bank that's going to determine what the ultimate target balance is, because of course the ultimate goal here is that your ledgers balance with your whatever your bank statements are actually saying. So what's the point of this check? I mean, why not just have the bank statement in front of you, check it once, and then be done with it? Well, the reason is because it may be that at the end of the year, you've maybe entered all your transactions for the year, it's December 31st has come and gone, and now you want to tweak certain items in your ledgers, and you might have hundreds of rows of data, and you're going to start tweaking and moving things around. It can be comforting to keep an eye on the cell over here to make sure that despite your tweaks and whatever accounting gymnastics you're doing, you haven't ultimately changed the running balance calculation in the bank account, but in fact it still correctly matches with your bank statement. Yes, you could keep your bank statement on hand and you could do momentary checks from time to time, but I like to just keep an eye on this check over here as well. So I'll give you an example of a year-end transaction that you might want to explode. So imagine you're doing your GST remittances and you're thinking, I wonder if there were some items that I didn't record that I paid for at the store, and I paid GST, and I want to reduce the amount of GST remittance I've got to give to the government, and I wonder if there's any items there that I didn't actually correctly break out the GST. And you think back to those coffee purchases that you made, and it strikes you that you didn't actually break out the GST, but you did pay GST on those when you were at the store. So and I'm actually not sure if you paid GST on coffee because I'm not a coffee drinker, but let's assume momentarily that you do. So now it's the end of the year and you want to break this amount up and break out the GST. So you come into the amount section and you double enter into, I think it was marketing, and it's let's say it's minus $3.20, sorry, plus $3.20. It's an expense that's increasing, and let's say that the GST is, oh sorry, that's marketing, and then tab 2, the GST is 0.26. Let's assume that's what it was. Oh, not 0.026, 0.26. Oh, I didn't click the GST button. Right, so there it is. Debits and credits are matching. Everything looks good. Let me go. So you'll see that it actually broke up the $3.46 for that other coffee cup. Sorry, the other coffee purchase. It added an extra row for the tax, and then if I go down to the GST paid, you see I've got coffee 26 cents paid on GST, and then in marketing I've got the $3.20. So if I go back to the top and I update my dates to the 24th, says it's balancing a subset, and remember, because I entered a subsequent date, the 26th is actually the most recent date in the spreadsheet. So I don't have to use the date button, I can also just type it in over here. And it's not balancing. Why is it doing that? So the date is correct, but these are not balancing. If I look at them, it's like a $3 something difference. So you know what the error is? when I exploded my $3.46, that transaction was already double entered, meaning that I double entered the 346, then I came and exploded it, and when I exploded it, I double entered it for a second time. So if I go down to the marketing account, I'm going to see 346 for the first cup of coffee, 346 for the second cup of coffee, then 320 for the double entry second time round. But imagine you couldn't figure that out. Imagine what I've just explained to you was too confusing, you didn't get it, and all you know is you've got a problem in your spreadsheet because it's not balancing. So how do you detect where the problem is? Well, that's the beauty of this column over here, because you know that you sometimes can have twos. Remember, we had two entries. In fact, this is almost a clue. The fact that this is still a 2, it's still reading a second double entry of the 346. So that's a bit of a clue. But imagine you didn't pick up that clue. You know that in this column, 2s are acceptable, where you've got a coincidence. Here, John Doe and Jane Brown got paid the same amount. So remember, 2s are acceptable. 1s are certainly acceptable. 1s are, in fact, the most common. But 0s are never acceptable. If you've got a 0, it means there's no corresponding double entry that matches. So if you've got an error, it's not balancing up here, you can't figure out why, you scroll down, you start looking for 0s. And this is a quick way to see where you might have made a mistake. So let's keep going here. Where's a 0? Well, it's going to be in, I said marketing, and that's not actually the case. So why is that? It's because this is a very difficult error to detect. It's not detecting, there's no 0s here, because all items do have a corresponding double entry. And we know that because this is a situation where we originally had a 2, we eliminated the 2, and we now have exploded this one, so there's no 2 in this cell, but there is a pair entry for the 346, which is still entered down in the marketing account. That shouldn't be there. So let me see if I can explain that in a slightly different way, or at least see if I can explain how to detect that. So you can see, you agree that we had only 2 coffees purchased, but we've got 3 entered here. So we know that this is the error, but we're not seeing a 0 in either of these 346s because both of these cells are looking at the corresponding double entry pair, which is the single 346 up here. So the way to check it is if you don't see any 0s, is to then look down this column and look for 2s that appear to be improperly paired. So these 2s are not improperly paired. They've both $1,000, they're both on the same date, we expect corresponding double entries, so these 2s travel in pairs. In fact, all 2s should travel in pairs. Again, over here, there's 2 $500 amounts. They are going to have corresponding double entries. This formula over here is going to detect both of those corresponding double entries, and so is this formula going to detect both of those corresponding double entries. So 2s should travel in pairs. This 2 is not traveling in a pair. That's how you know that it's the error. So let's go down to the marketing account. We can go down to 542. And then we have to maybe go back and check at our bank statements, figure out, we've got 3 coffees here, but only 2 were purchased. So let's quickly go back to the top. It's the one with Jim, which is still meant to be 346. So let's delete the one that is 346, but not with Jim. And there you go. Everything now balances. So that's a bit of a demonstration how it can be difficult to troubleshoot transactions, but you can use the guides here. If you see a 0, you know you've got an error. If you see a 2 that's not traveling in a pair, or you see a 3 that's not traveling in a triplet, then you've got an error. So that was a complicated one. Hopefully you won't have any sort of accounting histories that first you had a duplicate, then you double entered one duplicate and not the other. That was sort of the stars aligned to make the error difficult to find. But hopefully these numbers in this column over here will still guide you along the way. And another thing you can always do is to calculate the difference between these 2 cells over here. It'll come up with a dollar amount. You can then do a control find for a dollar amount. So for example, if we knew we were looking for 346, you can just do control find and it'll jump you down to some of them. So if you know that there's a particular amount that is the discrepancy, you might be able to use control find to help you detect where the error might be. Okay, so I think that brings us to the end of all the discussions about the ledger tab of the spreadsheet. Hopefully I've made it clear how the spreadsheet works. As you can see, everything can be balancing even though you've got some accounts with no information in them. And if ultimately you want to delete an account, perhaps let me just show you that. Imagine I wanted to delete PST receivable. So I do that. Click the Formula Fix button to get rid of that error there. Then I do need to update my Ledgers Index tab, so I don't have this error over here. When you delete here, you should just delete the row. Sorry, delete the cell. Do not delete the row. So I'm going to say delete Shift Cells Up. If you delete the entire row, you're going to damage this portion over here. Then I come back to my Ledgers tab, and my Go to Account macro will be working. But yeah, that basically brings us to the end of the Ledgers tab. So let's look very briefly at the Ledger Index tab. We've already done that. There is the guide up here, whether debit is an increase and credit is a decrease, or vice versa in the case of these categories of account over here. And remember to always keep the oh, you know what I did wrong? Look there, I didn't I should have deleted those two cells. I failed to delete that, so I'm going to have to move that up. But always keep these ledgers this ledger list updated, because remember it gets used not only for the go to account macro but also for the double enter macro. Then the income statement, as mentioned before, you must reference these. In fact, there's potentially an error over here because we deleted an account, so now we also need to delete the reference. So these references here need to go back to the Ledgers tab. That's a matter of accounting judgment as to which accounts belong in the income statement and which belong in the balance sheet. And then if you want to click the blue button over here, you can see it's running around collecting all of these balances. Same is true for the balance sheet. You've got to use accounting judgment to bring in the accounts that belong here. You also got to then reference your net profit or loss for the current period, the 3,138. It should stay referenced, but just keep an eye on that. For example, if your balance sheet is not balancing. And then, again, you can use the blue button over here to bring in all the balance sheet accounts. And if you want to print the balance sheet, you could just set your print area as you typically do in Excel. And as we've discussed, if you want to run the real quick check, you can just click the blue button over here, which has the effect of running the macros on both the income statement and the balance sheet at once. Alright, so hopefully that helps you understand how to use the spreadsheet, and hopefully if you use it, you find it helpful. Alright, thanks. Bye.